Welcome to Shrav's Technical Series. In today's session, we'll continue with the discussion of Pyfolio Returns Analysis or backtesting framework. In the previous sessions, we discussed this workflow and we discussed the principal component analysis, profit model analysis. In principal component analysis, we discussed if we can reduce the number of assets in a portfolio so that we can reduce the cost of managing a portfolio. Then in profit model analysis, we used the time series analysis plus trend to see if a stock is upward trending or downward trending into the future, though it gives a prediction of the future stock price, but it's not accurate. So you can use this model to look at the trend in the future, into the future, whether it's going to be upward trending or downward trending. So in today's session, we'll discuss Pyfolio Returns Analysis or a backtesting framework. So assume you have created a portfolio. You want to check its returns over the last 10 years and various statistics with respect to that portfolio. Pyfolio Returns Analysis can be used. To go to the Pyfolio Returns Analysis page, click on this link. So here's the Pyfolio Returns Analysis page. So it performs return analysis of assets and portfolio for last 10 years. S&P returns are used as benchmark. So to visit the Pyfolio Returns page in the Sravz UI, you could go to the portfolios page like this and then click on a portfolio like I already clicked for Magnificent 6 we discussed last time. Or you could go to the Analytics tab, click on Pyfolio Returns Analysis page and it displays it here. So in today's discussion, we'll go through the NASDAQ 100. I clicked on that index already. And the Pyfolio return sheet is here. Similarly, for Magnificent 6X, we have the returns tier sheet here. So we'll go through the statistics discussed shown here. So for this portfolio, Magnificent 6, which has these assets in it: Amazon, Google, Apple, Microsoft, Nvidia, Tesla. We saw an annual return of 37% over the last 10 years, and cumulative returns 2128 times over the last 10 years. So cumulative returns, and the annual volatility was 28.522%. Sharp ratio, etc., are shown here, and the individual components description is mentioned in the documentation. So Sharp ratio is compares performance of an asset with respect to risk-free asset, Kalmar ratio, etc. So in a future video, we'll go through these ratios, see how they can be used for analytics. For today's session, we just show that it is displayed in this page. So if you want these statistics, you can go to the returns tier sheet in the portfolio page. The next one is the worst drawdown statistics. It shows the maximum loss that occurred for the portfolio in last 10 years. So for example, the max loss was 48%. Then before that, there was 34% loss, 27, 22, and 16%. So over the last 10 years, if you own this portfolio, your worst case scenario would be like 48% loss. Worst case scenario is 48%, and less than that is 16%. So you can see a loss of between 16 to 48%. Past performance is not an indication of the future, but it at least gives you an idea how bad the portfolio can be. And so when there was a 48% loss, it started from 2021 11/19 date. Worst was on the valley date 2023 1/5, and then it started recovery and it recovered on 7/13 July 13 this year. It took 430 days for it to recover. So if we go to the diagram here, it shows that. So it started here, it kept dropping till here, and then it recovered. If you look at the Nasdaq in general, it drops slowly but recovers very quick. It's news driven. In this case, it dropped and recovered very quick. Here too, it mostly it drops and recovers quick, so it fluctuates. But most of the time, it stays here at zero loss. So this underwater plot gives you a rough idea about the peak, valley, recovery date. Peak, valley, recovery. Peak, valley, recovery. So that's about the worst drawdown statistics for the portfolio. Similarly, for the NASDAQ 100, we have worst drawdown statistics. For NASDAQ, it hasn't recovered yet. So there was 35% loss this year, if you recall, in the last cycle. And still the validate was 12/28. So it took 1 year to reach the validate, but it hasn't recovered yet. It has come up a little, but it keeps going down. So we are here, it hasn't recovered. Around -6%. It has gone down to -35%. So that's the worst drawdown statistics. Then cumulative returns. It shows the light gray is the S&P 500 returns, and these are the NASDAQ 100 returns. So as NASDAQ and S&P follow the same pattern, but NASDAQ has more gains and more fluctuations, higher gains, more risk, more returns. And then the cumulative return volatility matched to benchmark. So this is cumulative returns. This was cumulative returns. This is cumulative returns volatility. So how much risk is involved? NASDAQ has higher risk compared to S&P 100. And these are the cumulative returns on logarithmic scale. This is logarithmic scale. This is not on logarithmic scale. It's a percentage, 5%. This is logarithmic. And this is daily returns of the portfolio, the fluctuations in the daily returns. Then this we can skip portfolio beta, rolling Sharpe ratio, rolling volatility, right? Top 5 drawdown periods when there was a loss from the peaks and it's still recovering. This is also shown in the same underwater plot. So these were the periods when the Nasdaq has gone down, but it recovered, then it went down. So those are the top 5 drawdown periods. So there were around 1, 2, 3, 4, 5 drawdown periods in Nasdaq. So if you buy daily, accumulate regularly, you could have smoothened out the loss underwater plot. And these are the monthly returns. In the monthly returns yearly, so September is still not shown here, but in July you had minus 3.1. It is yellow, light green. So there was 3.8 gain in this month, 6.5, 7.6. So last year, January, we had minus 8.5 drop. In December, we had minus 9.1 drop. If you look at the December, usually it's going down, right? Light yellow, then red. And it starts around September. So there's a pattern or seasonality to this monthly returns. Maybe using a separate plot, we can analyze that. Similarly, annual returns mean is here. This is a bar chart and distribution of monthly returns over this bar chart, number of months and returns. Return quantiles is plotted here. So these advanced plots we will discuss at some other time, but for now in this video, we just want to show that these plots are present here in case you want to analyze them. So to recap, to do the Pyfolio returns analysis, you could either go to the analytics and do Pyfolio returns analysis, click on this page, or to do Pyfolio returns analysis or backtesting of the portfolios, you go to the data, then portfolios, and click on any of these portfolios. It takes a bit for the portfolios to process because there's a lot of data to process. 6 assets or up to 10 assets are supported. So they have to be analyzed and then displayed in the UI. It takes a bit, but they eventually show up in maybe a minute. So in our case, it's still displaying the data. Covariance analysis, principal component analysis, returns tier sheet. So it shows here. Returns tier sheet for this portfolio. It was 39.58%. So you could check out the other portfolios or check the backtesting of individual assets in the Pyfolio returns page. With that, I'll close today's session. If you have any questions or comments, please reach me out in the YouTube channel or in the discussion tab in the documentation page. Thank you for watching.